Federal Reserve Chairman Jerome Powell warned Wednesday that the U.S. economy may be facing a tough battle in fighting inflation. He reiterated his commitment to forcefully combat the problem. However, he warned that current policy measures may not be enough to slow the pace of price increases and that more action may be needed to bring inflation under control. Despite the risks of increased inflation, Powell said that it is better to fight it than to let it run away with the economy. He said that the fight should be done forcefully in order to reach the Fed's 2% inflation target. But he added that if the fight against inflation is not effective, it could weaken economic growth and result in a weak labor market. After Powell's speech, markets plunged. The prospect of sustained rate hikes made Wall Street nervous. In fact, the market's reaction to Powell's remarks reflected the risk that higher interest rates would push the economy into recession. In his speech, he invoked economic pain 2 times, referring to slower growth, higher unemployment, and financial strain, as well as the costs of fighting inflation and failing to restore price stability. He also pointed to lessons learned from the 1980s and 1970s. The Fed has been raising rates since March, and the next meeting is expected in September. The stock market was hit by the prospect of sustained higher rates, sending the Dow Jones Industrial Average down 600 points by midday. However, a recent report from the Commerce Department suggests that inflation may be easing, with the index of personal consumption falling 0.1% between June and July. The decline was largely due to lower gasoline prices. Inflation readings are still relatively low, which is why the Fed has been cautious in raising interest rates. The Fed is attempting to slow inflation by using the preferred measure, the Personal Consumption Expenditures Price Index. The Personal Consumption Expenditures Price Index grew by 6.6% over the past year, but economists expected growth to slow to 4.7%. The Federal Reserve Chair Jerome Powell has figured out how to convey a consistently hawkish message to the markets. It is a task he successfully executes when reading a speech or answering questions off the cuff. In today's market, a hawkish message is what markets are looking for. Powell reiterated that the central bank may deliver interest rate hikes of 25 basis points or more. While inflation in the US is at a 40-year high, that doesn't necessarily mean the Federal Reserve will pivot to a more dovish stance. Additionally, Goldman Sachs Group G's recently executed its first over-the-counter crypto options trade, advancing its presence in the digital asset market. After Powell's comments, U.S. stock markets were mostly higher. The Dow Jones Industrial Average was up 0.8%, the S&P 500 was up 0.6%, and the Nasdaq Composite gained 0.7%. On Thursday, Powell delivered a speech to the Federal Reserve in Jackson Hole, Wyoming, in which he signaled that the Fed will remain on a tight stance for quite some time to avoid inflation. He warned against loosening policy too soon, and his speech was a short one at only 8 minutes. However, his speech was partially offset by a better-than-expected reading of the University of Michigan's Consumer Sentiment Index. Today, the price of Bitcoin, BTC, sank to a new low. In less than 2 hours, the price of Bitcoin dropped to a 6-month low. This was due to a large amount of volatility. A weaker price means that Bitcoin will likely decline even more. As a result, investors have begun taking a more cautious approach in the digital asset market and the stock market. However, the next policy meeting is expected to shed more light on the Fed's plans. This may lead to another hike in the federal funds rate. However, the benchmark rate could remain between 3 and 4% for several years. After Federal Reserve Chair Jerome Powell's speech, the price of Bitcoin and Ether dropped over 2% and 4%, respectively. The Fed has indicated that it is ready to raise interest rates by 0.75 percentage points at the end of the year. However, the future of interest rates remains uncertain. The S&P 500, Dow, and Nasdaq are down more than 2% today. Most of the top 100 cryptocurrencies are also down. According to TradingView, Bitcoin, BTC, prices experienced a whipsaw effect following Powell's remarks. The cryptocurrency briefly spiked from $21,130 to $21,895, before plummeting over 6.22% to $20,530. In the morning, Kitco senior market analyst Jim Wyckoff warned that the price of Bitcoin would be influenced by the Fed's statement. The Federal Reserve's FOMC is scheduled to meet on Wednesday. The decision is expected to be released at 2 p.m. EST, and the Fed chair will give a press conference shortly afterward. Last week, global stock markets suffered major drops, and the crypto markets followed suit. However, precious metals managed to withstand the downturn and are up a few percentage points in the past 30 days. Although a recent Fed meeting was dovish, markets are more concerned about the Fed taking aggressive steps to curb inflation. This uncertainty is causing jitteriness among investors. As a result, the total market cap for the crypto market is down to less than $2 trillion, and its traded volume has remained below $100 billion per day. The recent data showed that the U.S. annual inflation rate fell to 8.5% in July, well below market expectations of 8.7%. The U.S. economy also shrank by 0.6% in the second quarter, beating market expectations of -0.7% contraction. The Fed's active stance against inflation has weighed on digital and risk assets. New development on the Las Vegas Strip, Resorts World International, has embraced Bitcoin and other cryptocurrency as a way to entice guests. The new property is the first new ground-up development on the Strip in over a decade and touts itself as a technologically advanced destination. As part of its digital transformation, Resorts World Vegas will feature the first fully integrated cryptocurrency experience on the Strip. The property will provide visitors with the opportunity to store and manage their Bitcoins and 40 other cryptocurrencies. Bitcoin's growth could prove beneficial for Las Vegas' casino industry. The growth of Bitcoin has created new opportunities for gaming operators, who will be able to collect gaming taxes from players and ensure there's no illicit activity in the industry. Meanwhile, a $305 million redevelopment of Tropicana Avenue's interchange with Interstate 15 will increase traffic and visitor volume on the Strip.